Double entry bookkeeping. Patrick. We are going to enter the following transactions into Patrick's ledger accounts for the month of March. So if we start up here at the top of the page, you can see Patrick started business on the 1st of March. The following is a list of his transactions for the month of March. So these are the transactions that we're going to record, and what we're specifically asked to do is A, write up the above transactions in the books of Patrick for the month of March. So we're going to write into the ledger accounts, and then B, balance off the accounts and prepare a trial balance. So we'll go through these transactions one by one, starting off with March the 1st. So March the 1st started business by lodging 100,000 in the business bank account. Now for every transaction we're going to need two ledger accounts. One ledger account we will debit and the other ledger account we will credit. In this particular transaction we need a bank account. So I'll open up a bank account. Here we are here. And Patrick's putting the money in. So if the owner's putting money in, that's called capital. So I'll have a capital account here. So they are my two ledger accounts. Now anytime we're recording money going into the bank account, you record it on the debit side. So I'm going to debit the bank account. So I've got the date, a reference, and the amount. And then down here on the credit side, I'll have date, reference, the amount. So I've recorded 100,000 on the debit side of the bank and 100,000 on the credit side of capital. Moving on to March the 2nd. Bought premises for 70,000, paying by check. Now, paying by check implies the money came out of the bank, so we need a bank account. And if you look at your bank account, you already have one transaction on it from the 1st of March. Buying premises, so we need a premises account. Now, when money goes into the bank, we debit the bank. So if money's coming out of the bank, we will credit the bank. So I'll write in here on the credit side of the bank, March the 2nd, premises 70,000. And then down here, I'm going to debit the premises account. So remember, for every transaction there are two accounts. One account will have the transaction recorded on the credit side, and the other account will have the transaction recorded on the debit side. So in the premises account, I'm going to write in here, March the 2nd, bank 70,000. Now, moving on forward, March the 3rd, purchase goods costing 12,000 on credit from Adrian. On credit means no money changed hands, so no money moves, so the bank isn't involved here. Purchasing of goods means we're buying in goods for resale. That is recorded in what is called a purchase account. So we need a purchase account and we need an account for Adrian. Now we have neither of these accounts, so we open them up and we record them. Now generally speaking, when you buy goods in, you use the purchase account, and the purchase account will have the transaction recorded on the debit side. So I'm going to write in over here, March the 3rd, Adrian, 12,000, and then on Adrian's account, I'll record the transaction on the credit side. So I'll write in here, March the 3rd, purchases, 12,000. Now, the balance on Adrian's account is on the credit side. Adrian is a creditor. We owe Adrian the money. March the 4th, bought a new delivery van from MV Motors on credit. Again, it's on credit, so no money changed hands. So what we need is a delivery van account and an MV Motors account. Now, a delivery van is an asset, so we record assets on the debit side. So I'll write in here, March the 4th, reference it to MV Motors, and 20,000. And then down here, on the credit side of MV Motors account, I'll write in March the 4th, delivery van, 20,000. So MV Motors have a balance on the credit side. They are creditors. Patrick owes them 20,000. March the 5th, purchase goods. This is the purchase account again. Paying by check means we're going to use the bank. So we need two accounts, and we have both of these accounts. We have a purchase account, and we have a bank account. So if you go back up and look at your records, you'll see on the bank account, there are already two transactions, March the 1st and March the 2nd, and the purchase account, there's March the 3rd. So now we're buying more goods and we're paying, so it's money going out of the bank. So we'll record that on the credit side. So in here I'll put in March the 5th, purchases 3,000, and then on the purchase account I'll put down here March the 5th, bank 3,000. Moving on then to March the 10th, which is the next one. Sold goods for 6,000 for cash. Okay, when I sell goods, this is recorded in a sales account, and it says cash rather than bank, so I'm going to open up a cash account. So I have a cash account and a sales account. Now a cash account is a bit like a bank in the sense that money coming in, you put it on the debit side, money going out, you put it on the credit side. So here, cash is coming in, so I'm going to write in here, March the 10th, sales 6,000. That's on my cash account. Now, sales, generally speaking, are always recorded on the credit side of the sales account. So I will be crediting this anyway. So I'll have down here, March the 10th, cash 6,000. March the 15th, purchased more goods, goods for resale, that's a purchase account, from Adrian on credit. No money moves, so I need to account for Adrian. Now we have both of those accounts, the purchase account and an Adrian account. So if you look at your purchase account, you have two transactions already on it, and on the Adrian account, you have one transaction on the credit side. Now we're going to have the same thing again. Basically, we're going to copy what we did in March the 3rd, except this time it's going to be March the 15th. I'm going to write in Adrian, 10,000. And then, of course, down here, I'm going to write in, just underneath the previous transaction, March the 15th, purchases 10,000. March the 20th, sold 8,000 worth of goods on credit to bill, so no money changes hands, so I need an account for bill. Sold goods, I already have a sales account, so I need an account for bill, and if you look back, you can see your sales account already has an entry on the credit side. Now, sales will always be on the credit side, so to record this transaction, I'm going to be crediting the sales, so therefore I must be debiting bill, which is correct. Bill will be a debtor. Bill owes us money. So up here I'll write in March the 20th, sales 8,000, and then down here I'll put in March the 20th, bill 8,000. March the 26th, received check from bill for 5,500. Well, now I already have an account for bill, and when you have a check, see check in any of these descriptions, you know it refers to the bank. So I need a bank account and bill. We have both of those accounts. Now, bill is giving us money, so we're going to lodge the money into the bank account. So I'm going to debit the bank. So I'm going to put in here March the 26th, I beg your pardon, bill 5,500, and then down here on the credit side of Bill's account, I'll put in March the 26th, bank 5,500. So Bill has paid us some of the money that he owed us. March the 27th, paid office expenses by check. Now, by check means bank, so we have bank. We don't have an office expenses account, so we'll open up a new ledger account for office expenses. Now we're paying the money out, so what we'll do is be putting it on the credit side of the bank account. So we'll write it in here. March the 27th, office expenses 250, and then on the debit side of the office expenses account, I'll write in March the 27th, bank 250. March the 28th, posted a check, implies bank, to MV Motors, so I need the bank account and MV Motors account. Now, as you already know, we have both of those, so if you look back up, you have a bank account, quite a few transactions on it, and you have an MV Motors account with one transaction on it from March the 4th. Now, we're paying money, we're sending a check to MV Motors, so we're going to credit the bank, it's money going out of the bank, so I'm going to write in here, March the 28th, MV Motors 4,000, and then down here I'm going to write the transaction in on the debit side of MV Motors account, March the 28th, bank 4,000. And then March the 29th, send a check implies bank, to Adrian for 8,000. So I need a bank account and Adrian account. So we have both of those accounts. Here's the bank account, and there's Adrian's account. Now we're sending money to Adrian, so money's coming out of our account. So we're writing a check and posting it to Adrian. So in here I'm going to write in March the 29th, Adrian 8,000, and then I'll record that in Adrian's account on the debit side. March the 29th, bank 8,000. So you can see here we did owe Adrian 22,000, but we've just paid him 8,000. Okay, that completes the double entry bookkeeping. So we move on to balancing the accounts. Now we're going to go back up to the very top and we're going to balance the accounts one by one. First account I have is the capital account. The capital account has 100,000 on the credit side. Now what I'm going, there's only one transaction on it. I'm going to write in the total here, 100,000. I'm going to write the same total on the debit side. Now obviously this side here doesn't add up to 100,000, so I'm going to put in here the missing figure, the figure that makes it balance, which is 100,000. I'll call that my balance carried down, 100,000, and then I'll bring that down here. Now you just note the date here, March the 31st, so this is the end of March. So what we're doing is we're setting the accounts up for the beginning of next month. So I'll date this April the 1st, balance brought down 100,000. So that is basically saying that the balance on the capital account on the 1st of April is 100,000 on the credit side. Now the bank is a little trickier. So we have a look at the bank here. Now if we add the two sides, just so we get out a calculator, I can have a quick look at it and see which side is the biggest side. Well, the debit side is the bigger side. It comes to 105,500. So I'm going to write 105,500 in there, and I'm going to write in the same figure over here. Now this figure, this side here, doesn't add up to 105,500. In fact, if you check it, it adds up to 85,250. So what I need to do is I need to put in the balancing figure here that will make this column or this side add up to 105,500, and that will be my balancing figure. So at the end of the month here I'll have 31st of March, the balance carried down, and the figure is 20,250, and I'll bring that down to start the next month, April the 1st, balance 20,250. So that is saying to us that the bank account has 20,250 in it on the 1st of April. A debit is an asset. So the asset of bank, we have 20,250 in the bank. Moving on, premises. Well, there's only one transaction here, so it's fairly quick. 70,000, 70,000. Balancing figure, 70,000. And bring the balance down, 1st of April, 70,000. Okay, and it's on the debit side because the premises is an asset. Assets are always on the debit side. Purchases account. I have a couple of transactions here, so I'll balance them off. Now, obviously there's nothing on the credit side, they're all on the debit side here. So that would come to 25,000. So I'll pop that in, and I'll put the balancing figure in here. So we have March 31st, balance brought down 25,000, and I bring this down here. So beginning of the next month, I'll have on my purchase account, April the 1st, balance brought down 25,000. Adrian's account. Now, Adrian is a creditor. We buy goods on credit from Adrian. We owed Adrian 22,000. Now, we paid him just at the end of the month 8,000. So how much do we owe him now? Well, the balance here comes to 22,000. So I have that there and there. So what I need is the figure here, the balancing figure, or the difference. What is the difference between 8,000 and 22,000? Well, the difference is 14,000. So the balance carried down is 14,000. So I'll bring that down onto the credit side. April the 1st, balance brought down 14,000. And on the credit side, Adrian is a creditor. Patrick owes Adrian 14,000 on the 1st of April. MV Motors, similar situation. Patrick bought the car for 20,000 on credit, so he owed MV Motors 20,000, and he paid them 4,000. So the biggest side is obviously the credit side, 20,000. So I put my balancing figure in here, which is 16,000. And I bring that down. So April the 1st, balance brought down 16,000 on the credit side. MV Motors are creditors of Patrick. Patrick owes MV Motors 16,000 on the 1st of April. The delivery van, only one entry on it, so we just total up the columns, put in the balancing figure over here, 20,000, and bring it down here. And of course the balance is on the debit side, because the delivery van is an asset, and assets are always on the debit side. Cash account, same thing, put in 6,000 and 6,000. Balancing figure, 6,000, brought down for the 1st of April, 6,000. So cash is an asset, so it's on the debit side. Sales account, two transactions here. Remember, sales are always on the credit side, so it's always be fairly easy here. 8 and 6 is 14. Put in the totals. Put in the balancing figure, balance carry down, and we bring it down here. So we'll have a credit balance on the sales account, 14,000. The bill account, Bill is a debtor. In other words, Bill owed Patrick money. He owed 8,000, he paid 5,500. So the column totals are 8,000, and the difference figure will be the amount of money that Bill still owes Patrick, and that figure is 2,500. So we bring that down here, and note it's on the debit side. Bill is a debtor. That's an asset. People who owe you money are assets. Office expenses 250. Well, we're just going to total up the columns, put in the balancing figure of 250, and bring it down here on the debit side again, 250. Remember, assets are on the debit side, expenses are on the debit side. So when you're looking at things on the debit side, it is always either going to be an asset or an expense. It's usually quite easy to tell the difference, and obviously this is easy enough because it actually says expenses in it. Okay, that brings us to the end of balancing off the account. So the next stage now is a trial balance. So for my trial balance, I'm going to construct my trial balance on what is often referred to as journal paper. So what I have here, I'll have across here sort of a wide column here for writing a narrative, and then I'll have two columns here which will be debit and credit columns. Now I'm just going to extract the information from the ledger accounts. So the first thing I'm going to do is I'm going to take the first account I have, and the first account I have is capital. So capital, now if I go back and look at the capital account, I can see here, just jump back to it there, the balance on the capital account is 100,000 on the credit side. So what I'm going to do is I'm going to write that in over here, 100,000. Now my next account is bank. So if I go back to the bank, oops, figures have disappeared. Let's just pop them back in again. The balance on the bank is 20,250 on the debit side. So what I'm going to do is I'm going to write that in here on the debit side. And so on down. The next one is premises. You can put them in any order. These are just the order that I actually have the ledger accounts recorded. So premises, and if you look at it, we've done all the hard work here, so I'm just transcribing or extracting the information. The balance on the premises is 70,000 on the debit side. Premises are an asset, so of course it'll be on the debit side. Purchases are always on the debit side, so I expect to find that figure on the debit side, which I do, 25,000. Adrian is a creditor, so the balance on Adrian's account will be on the credit side. That's 14,000. MV Motors, they are also creditors, 16,000. Delivery van is an asset, so if you look back at the delivery van account, you see it is on the debit side, 20,000. Cash, that's the 6,000 on the debit side. Sales, well, we said here, purchases are always on the debit side. Sales will always be on the credit side, 14,000. Bill is a debtor. Bill owes us money, so that's an asset, 2,500. And then the office expenses, 250. Now, they are all my ledger accounts. I've recorded all the ledger accounts here, and I've just listed my trial balance, the debit and credit balances on each one of those accounts. Now I'm going to add up the debit on the credit side. So I put the little line across there, add them both up, and both sides must balance. So the debit comes to 144,000, and the credit comes to 144,000. So I now have a balanced trial balance. Okay, that is the end of Patrick's account. What we have done here is that we have we've entered all the transactions, balanced off the ledger accounts, and extracted the trial balance. I hope you found that helpful, and thank you very much.